Hey everyone, Ronak here. And today we are talking about something that's been making headlines and affecting every single Indian in some ways. The problem with the Indian rupee. Specifically, we will explore why the Indian rupee has been weakening against the US dollar, what that's doing to our economy, our trades, and even how it influences India's relationships with other countries. I'll break it down all step by step with all the details so you can understand the full picture. If you are new here, hit that subscribe button and turn on the notifications so you don't miss more in-depth videos like this. This one is going to be a bit longer because the story is bigger than most of the people thinks. Let's get started. First of all, let's set the stage with a bit of history because understanding where we have came from helps explain where we are now. The Indian rupee has a long story of ups and downs against the dollar. Back in 1947, when India gained independence, $1 was worth around 3.30 rupees. That's right, it was super strong compared to today. Over the decades, though the rupee has steadily depreciated, for example, in the 1980s, it hovered around 12 to 13 rupees per dollar. By 2015, it was in the 60s, and fast forward to 2024, it was around 85 rupees. In 2026, we have seen it hit new record lows, crossing 92 rupees per dollar. As of right now, in late March 2026, it's sitting at 94 rupees per dollar. That's a depreciation of roughly around 5 to 6% over the period of 12 months, and the worst performance among the major Asian currencies. Now the question is, why does this happen? It's all about supply and demand in the currency market. If more people want dollars for imports, investments, or whatever, and fewer dollars are coming in, the rupee weakens. But let's dig into some specific reasons, especially in recent years. So what's causing the Indian rupee to slide down against the US dollar right now in 2026? Well, there are several big factors at play, both domestic and global. Firstly, India's trade deficit is massive. In October 2025 alone, India's trade deficit was around $40 billion. That means we are importing way more than we are exporting, which creates a huge demand for dollars to pay for that imports. Things like crude oil, electronics, and machinery, we rely on them heavily from abroad. Surging gold imports have also played a role, as Indians love gold for jewelry and investments, but it widens that deficit. Then there is the current account deficit, or CAD, which includes trade plus other flows like remittances. It's been persistently high, putting more pressure on the rupee. On the global side, US policies under President Trump hit us hard at first, with high tariffs up to 50% on Indian goods like steel and aluminium. But in February 2026, India and US signed a major trade deal that slashed many of those tariffs down to 18%. Sectors like gems and jewelry, textile and agriculture still saw a sharp drop in exports year over year. Without full implementation and clarity, this uncertainty was scaring off investors for a while. Speaking of investors, FPI, that is foreign portfolio investors, are pulling out money from the Indian stock market. Persistent equity outflow, that means fewer dollar coming to India. Now the question is why? Because the US offers higher yield on investments, so capital is flowing there instead. Global uncertainties like geopolitical tensions are making things worse. People are hedging against further falls, which creates a rush for dollars. Now here is the big geopolitical angle that's rarely talked about in detail. The recent conflicts in West Asia and the US petrodollar game. Right now in 2026, escalating tensions and outright conflict involving the US, Iran and Israel. Oil prices have surged close to $120 per barrel because of fears over supply disruption in the Strait of Hormuz, the choke point through which 20% of global oil flows. India imports nearly 85% of its oil, so every spike means we need way more dollars to pay for it. This is exactly what's pushing Indian rupee to record lows. Let me explain the Petrodollar System simply. The US struck a deal with Saudi Arabia and other OPEC nations. They sell oil only in US dollars. That means every country buying oil, including India, must hold dollars. It keeps the dollar super strong and gives America massive geopolitical leverage. During conflicts, the dollar becomes super safe. Everyone rushes to it, making our Indian rupee even weaker. The ongoing Iran conflict is the latest example. Higher oil bills plus capital flight is equals to vicious cycle for the rupee. But India isn't sitting idle. We have aggressively ramped up Russian oil imports over 30 million barrels just in March 2026 and settled most of it in Indian rupee. Almost 96% of our bilateral trade with Russia is now in rupees and rubles. This is part of a big de-dollarization through BRICS. The RBI is encouraging rupee-based deals with more countries to break free from this petrodollar trap. Analysts say if oil stays above $100 for long, the rupee could test 95 to 96 rupees by the end of the year. It's a vicious cycle. Weakness leads to more outflow, which leads to more weakness. Remember, that's a vicious trap. Now let's talk about the impacts on Indian economy. This depreciation isn't all bad. Well, it's a double-edged sword, means dodhari talwar. On the positive side, a weaker rupee makes our exports cheaper for foreign buyers. So companies in IT, pharmaceuticals and textile get a boost because they earn in dollars but convert to more rupees. That means higher profits and potentially more jobs in those sectors. Remittances from Indians working abroad, think NRIs in the US or Gulf, also become more valuable when converted back home, helping families and the economy. In fact, it can quietly boost export earnings and make India more competitive globally. But the negatives are significant, and the geopolitical oil shock is making them worse. Imports get expensive, crude oil costs more, leading to higher fuel prices and inflation. That hits everything from transportation to food. For businesses relying on imported raw material, costs go up, squeezing the margin. Foreign debt becomes harder to service because you need more rupee to pay back dollar loan. Investors' confidence take a hit too. If the rupee keeps falling, foreign investors might pull out more money, leading to stock market dips and slow growth. Overall, while it might narrow the trade deficit in the long run by making imports less attractive, in the short term, it widens the CAD, that is current account deficit, and puts pressure on the RBI's forex reserves. Expert says it's a cause for concern. If not addressed, combined with these conflicts and petrodollar pressure, it could lead to a deeper economic crisis since over 75% of global trade is still in dollars. Moving on to trade specifically, this is where the rupee's weakness shows its mixed bag nature. As I mentioned, exports get a leg up. Labor-intensive sectors like apparel and agriculture could see more demand because our goods are cheaper abroad. India's export to the US were up to 10% year to date till October 2025, partly due to front-loading before tariffs kicked in. But the new trade deal is a game changer. Tariffs are now lower, which should help recover lost market shares. Now the next question is, how does all this affect India's relations with other countries? Well, currency strength is tied to diplomacy, and geopolitics is front and center now. With the US, the recent trade deal eased some tensions, but the petrodollar system and sanctions during conflicts give America leverage. India is pushing harder for even better terms to stabilize the rupee. On the flip side, a weaker rupee and our rupee oil deals are strengthening bonds with Russia. We bought record Russian crude after disruptions in West Asia, bypassing dollars entirely. Remittances from the Gulf helps relations there too. Globally, it highlights India's vulnerability, US policies and oil producers, but it's also pushing us to diversify. If depreciation continues, we will see more bilateral deals in rupees, like with Russia, Iran or BRICS countries, to bypass the dollar. Overall, it's forcing India to accelerate de-dollarization and reshape our foreign policy, something that could define the next decade. Now the next question is, what's the government is doing about this? The RBI has been intervening aggressively, selling dollars from its $723 billion forex reserves to support the rupee when it dips too low. In the 26-27 budget, Finance Minister Nirmala Sitharaman announced big pushes, public capital expenditure up to 12.2 lakh crore rupees for infrastructure, which could attract investments and boost growth. They are aiming to lower the fiscal deficit to 4.3% of GDP and debt to GDP to 55.6%, showing fiscal discipline to calm markets. There is a 10,000 crores SME growth fund to help small businesses export more. to internationalize the rupee and fight the petrodollar dominance. The RBI is allowing Indian banks to lend in rupees to non-residents in Bhutan, Nepal, Sri Lanka for trade. They are also setting transparent reference rates for major trading partners currencies to encourage rupee-based deals, plus reviewing foreign investment rules and linking BRICS digital currency. These steps aim to build resilience and reduce dollar reliance, exactly what we need during these turbulent times. Well, in conclusion, the rupee's weakness against the US dollar is concerning and also a complex issue rooted in trade imbalances, global policies, investors' flow, recent West Asia conflicts, and the long standing US petrodollar game. It boosts export and remittances but fuels inflation, hurts imports, and strain international ties. While the government and RBI are taking strong measures, including smart rupee deals with Russia, the outlook remains challenging. Experts see more depreciation ahead unless we fix the fundamentals like boosting exports, cutting deficits, and accelerating de dollarization. What do you think? Is this a temporary blip because of the Iran conflict or a long term worry tied to the petrodollar system? Drop your thoughts in the comments below. Thanks for watching.